Hello from Wanted Markets. This is Aura with the global economic outlook in the week ahead, which is going to be the week number 8 of 2025. As always, first let's check what we had last week, and then we can go forward and see what we are expecting for the week ahead and market reactions. Last week started with the Chinese inflation numbers after several months of falling inflation. Chinese inflation finally increased, and it was even increased more than expected on the monthly scale in January with 0.5% monthly raise. It was amazing. Even though the producer price index repeated the 2.3% drop in December, but still January inflation, consumer inflation was better than expectations, in line with other data such as increasing the new loans. Sorry, all confirms that finally the Chinese government and central bank stimulus they are helping the economy, and Chinese economy is improving better. Uh, and the others, looking the other economies, let's talk about the British economy, and then finally at the end I will talk about the U.S. In United Kingdom, we had so many important data such as GDP, industrial production, and manufacturing production. Generally, the data that published from UK economy, they were surprising the market with better than expected numbers. Actually, we were waiting to see the weaker data, but sorry, but we were expecting to see the weaker data, but these data somehow surprised the market with better results. However, with the better GDP, industrial production, and manufacturing production, in the last quarter, 2024, and January and December months, different numbers for the different data for different periods. Still, the business investments fell by 3.2% in the fourth quarter. It shows that despite unlike the slightly improving economy, still the investors they are not so happy about the economic condition. So the investments fell by 3.2%. The GDP data published from the Eurozone also was better than expected, with 0.1% GDP improvement in the fourth quarter. It was better than 0.0% better than the flat expectations. And then in Russia, we had the central bank meeting and interest rate decision. The CBR didn't cut the rates and held the rates at 21%. Most probably, the central bank in Russia will start cutting the rates from the next month. But for now, especially if the peace talks go forward, for now, the interest rate is still at 21%. At the same time, we had inflation numbers from Russia also, which on the monthly scale from 1.3% fell to 1.2%, but on the annual scale from 9.3% increased to from 9.5% increased to 9.9%. And in United States, while in the United States, last week the retail sales fell, and like somehow they disappointed the market with the sharp falling, actually we can say, because retail controller, which calculating in the GDP, fell by 0.8% after 0.8% improvement in December. In January, it fell by 0.8%. Actually, the lower interest and lower retail sales is something expected in January. We know that they usually in November and in December people they buy more, and in January the retail sales usually is falling. I mean, it's a little lower, but falling by 0.8% for the retail controller, and overall the headline retail sales, which fell by 0.9%, it was somehow surprising. But still, on the other data, such as initial jobless claims or continuing jobless claims, we saw that the labor market is still very strong, with only 213,000 apply to receive the unemployment benefit, which shows that the labor market is very strong. On the inflation front also, we saw that the inflation for both core CPI and CPI, they beat the expectations. Core CPI increased by 0.4%, and CPI headline inflation increased by 0.5% on the monthly scale, and both of them on the annual scale also increased. Core CPI increased to 3.3%, and headline CPI increased to 3% on the annual scale. The data generally showed last week, they showed that the U.S. economy is still strong, the inflation is still high, and with the Mr. Powell's testimony in front of the Senate also, we understand that the Federal Reserve with these data is going to hold the higher rates for longer, but which support the US dollar, put the pressure on the stock market. But at the end of the week, when there was a news about the reports about the phone talk between the Mr. Putin and Mr. Trump, President Trump and President Putin, somehow the market risk is fell, and that supported generally the stock markets and put the pressure on US dollar. Exactly the opposite side of what's happened just the day before that after inflation reports. On the sorry. On the energy market, we had OPEC monthly report, EIA and IEA monthly report as well. Most of them, they confirmed that for 2025 and 2026, the market is going to have more demand. It'll have a more demand compared to the previous month. They increased the price by $2 as well, especially in the EIA short-term energy outlook. They increased the expected price for this year and next year by $2, which generally shows that the inflation, that energy markets can be still strong. But at the same time, we know, as mentioned, that this peace talk at the pressure on the energy market as well, because if there is something happen, the peace talk or peace agreement happened between the Russian, not saying that Ukraine, in fact, the Russia and United States, then we can see more better and free energy market, which will produce more supply actually in the energy market as well. Week ahead, again, let's continue with the United States. In the United States, the market will focus again on the continuing on this geopolitical events and the Fed members' comments, especially that the many of Fed members, FOMC members, they're going to have a speech. They're going to have a speech next week. They're going to speak and they will explain about the Fed policies. But still, on Wednesday, we're going to have the Federal Reserve monetary meeting minutes of the minutes of 2 weeks ago. The meeting of 2 weeks ago. We're going to have the minutes, and in this minutes, most probably we will see again. We will repeat the hawkish comment of the Federal Reserve, and that can be the supportive for US dollar and put the pressure on the stock market. But at the same time, we have to see the other data, what other data have to tell us. At the same time, the next week in United States, we're going to have the housing market data, both for housing starts and for pending home sales. Both of them, we are expecting to see the lower data, weaker numbers because of higher mortgage rate that we had in the previous month. That most probably would put the pressure on the housing market activities. At the same time, there are several central bank next week going to have the central interest rate decision and monetary policy meeting. On Tuesday, the first one, it will be the Australian Central Bank, Reserve Bank of Australia, or RBNZ. We are expecting to see 25 basis point rate cut after falling the inflation rate in Australia. That can be something expected, and most probably we can see the rate cut in Australia. But in New Zealand, which is going to be on Wednesday, from New Zealand, we are expecting 50 basis point rate cut. Most probably the New Zealand will cut the rates from 4.25% to 3.75% by 50 basis point or 0.50% rate cut, as if New Zealand economy has been suffering a lot in previous months. And finally, on Thursday, we're going to have the PBOC loan prime rate as well, interest rate decision as well. The loan prime rate for 1 year loans going to stay unchanged at 3.1%, but for 5 years loans, which is the base of mortgage rates as well, going to stay at 3.6%, unchanged as the market expectations. In Turkey also, we're expecting to see again 250 basis point rate cut by central bank, or there is a 50% chance of rate cut, but still generally the central bank in Turkey still need to continue the rate cut. We know that inflation already fell to 1.2% in Turkey, 44% annually, down from 85% that we had a year ago. So generally, the central bank in Turkey, to support the economy, they need to cut the rates. 45% is very high. Most probably, there is a 50% chance for cutting rate, but I think if the 250 basis point or 22.5% is could be the expected rate cut in Turkey. Next week we're gonna in United Kingdom also we're gonna have too many data, especially the inflation numbers. We are expecting to see the inflation, core inflation, to increase by 3.3%, 3.7%, up from 3.3% of the previous month, and inflation numbers gonna publish on Tuesday, I think. And headline inflation, headline inflation is going to increase to 2.6%, but core inflation is supposed to increase to 3.7%. This is generally the inflation is improving. And on the other hand, on the labor data, also we're going to have the labor market data on Tuesday, most probably. Yep, on Tuesday, we're going to have the UK labor market data. We are expecting to see unemployment rate to increase to 4.5%. Generally, the labor market is going to be weaker, but average earnings going to stay at 5.6% or 5, including the bonuses. It's probably increased to 5. It can increase to 5.9%. Lower labor data, but lower labor, I mean, kind of the lower new jobs, less new jobs, less new kind of, we can say that less lower newly created job, the better to say it this way, but higher payments. That's why average earnings is going to be increased, average earnings including the bonuses. In Japan, so next week going to be the very busy week. This in Japan, also we're going to have the GDP and inflation numbers. GDP data will publish on Monday. But the GDP will publish on Monday. We are expecting the better GDP improvement in the fourth quarter. Also, the industrial production can increase after 2.2% falling in December. In November, in December, we're expecting to see the 0.3% industrial production improvements. Japanese inflation numbers also will publish on Friday. We are expecting to see the inflation to stay around 3%. The inflation is still high. That's higher inflation. We know that the Japanese economy in recent months was improving a better. At the same time, inflation also was increasing. So for this month also, which is going to be this week, which is going to be published in January inflation numbers, we're expecting to see the inflation around 3% or maximum to 3.1% is the market expectation. But generally, with a better economy and inflation, higher inflation, we can expect the Japanese central bank to increase their rates again this year before the last quarter. So which means that Japanese yen can get more support. Let's check the charts and see with this data what we can expect in the charts. As we are looking to the US dollar chart, we now as you can see here, after inflation numbers, US dollar index again increased about 108 marks towards 108.4550. But right after the reports about the Mr. Trump's conversation or phone talk with the President Putin, we saw that the pressure on the US dollar as the safe haven demand lower. That's support that which can be the initial reaction, because that was the first news about that, the first news about the conversation. If they continue this conversation and confirm the exact date of meeting in Saudi Arabia between the Trump and Putin, then the market is can be lower and we can see more pressure on the US dollar index. At the same time, less demand for the other safe haven, including the gold as well. But the gold technically about 2,840 is still bullish. About the US dollar index also for this week and for the next days, 105.50, 106.60, or around 107, around these numbers can be expected range for US dollar index. As for the energy market, these news can be negative for the energy market because despite it, better economic, I mean, more demand and more expected demand for 2025, but still, there are too many the talks about the peace talk, especially between the China, Russia, and Ukraine, which can increase the market supply. So that's not a good news for the energy market. That can be put the pressure on the oil prices. So $67, $70, that can be the fairly price for that to see. On the stock markets, well, this in the recent weeks, we are always expecting to see the week going to be close lower. But again, after that, we are during the week, we are like the first days and until the last days of the week, we can see the downtrend, and finally in the last day, something changes and some geopolitical news improving the market. Stock market in the week ahead with the economic data can be under pressure, but the only thing that can support the stock market could be the geopolitical news. We don't forget that we are talking about there are whispers about the AI bubble. You know that the dot-com bubble, what's happening in the dot-com bubbles. Now we have the A talks or whispers about the AI bubbles. We have to take care about that. The market has nothing such important data or economy improvement to see this improvement. So the AI bubble could be another thing that can happen these years, this year or next year maximum to these years. That can be very important things to watch and be careful about that. Continuing with that, the stock market, generally, the economic data for the week ahead, they are not supporting the stock market, but the geopolitical tensions can support by that. But technically, around about 6,000 for the SP 500 can be positive. Falling under 6,000 can open the doors for much lower levels, 5,930, and then 5,800 and lower that numbers. But above 6,000, the bulls are market leader. On the cryptocurrency market, these data, they are known as supportive or negative for the cryptocurrency market. Generally, mostly we can see negative, but not that much. But from the technical point of view, Bitcoin is still moving lower, lower low and lower high, with creating a lower low and lower high. But now for now we don't have such a important data to say that okay, these numbers and these data can support the cryptocurrency market. So cryptocurrency market can be under pressure, and Bitcoin can get more pressure and fall lower. So Bitcoin is negative right now, unless if it increases about 101,000 US dollar. Otherwise, the side movement with the downside tendencies are expectations for the next days. That was what happened last week, what we are expecting for the week ahead. And if you had any other questions, don't forget to write down in the comment sections. I'll try to get back to you as soon as I can. Have a good time. Bye-bye.